Hello and welcome to Devon Fund's weekly client webinar. Welcome along today. We're here in our new offices in the HSBC Tower, so very pleased to be hosting today. I'm joined by portfolio managers Tama, Willis and Mark Brown. How are you both?
Good.
Excellent.
Thanks.
Great. So look, this is continuing our webinar series on a weekly basis, which we're bringing to clients. All about really sort of giving a look inside the fund manager's room, if you like. Companies that we're meeting, what we think of them, what we like, and also what we don't like. So, yeah, really about engaging with you as our clients and sharing our views. And as I say, we're going to be doing this every week. So, great that you can join us, and look forward to having you join us every week. Look, without further ado, let's get started. Maybe talk a little bit about what's been happening. I suppose, Tama, the reporting season's been pretty interesting as far as the financials go. There's been some pretty positive results, some negative, but mostly positive. And particularly, I suppose, when you look at NAB's result, reflective of a rebounding Australian and New Zealand economy. So you're having a great month in the Trans-Tasman Fund, and I know NAB's a stock that you're back.
Yes.
You met management recently. I mean, what do you think of the situation?
Yeah, absolutely. No, we're very pleased with the National Australia Bank result across the financial sector and the bank sector. We've seen a varied range of performance, but NAB's been undergoing sort of restructuring program for the last 5 years. And Ross McEwen, who's a seasoned banker, used to be at CBA, then he went to RBS in the UK. Now he's back at NAB, and he's really refocusing that business. And we're seeing the fruits of that. They came out with, a very strong result, both in terms of volumes, but on the business banking side. And that's the really differentiator for NAB is they have around 40% of their earnings from a business bank, and Australia recovering is driving a really sharp uplift in volumes, and they are winning market share in that space, which is really encouraging. Margins have been respectable, but the cost cutting is also what really is really helping change perceptions. They've done all their cost cutting, and their cost base is around 7.8 billion. That compares to Westpac at about 12, ANZ at about 9 billion. So they're running a much leaner business, and they're growing more strongly. So we see a really good sort of 24-month outlook for that business.
Excellent. And they released some provisions as well. Do you see more of that?
Yeah, absolutely. I mean, Ross McEwen, we had actually a one-on-one, sort of a 4-on-1 call with some Australian investors with Ross McEwen, with the CEO, and that gives you an idea of the sort of access we get. And he's still been pretty conservative about provision release. They released some, but there's still, north of 500 million, up to $1 billion that they could release over the next 12 to 18 months if conditions allow. Now, if you look at the sort of recovery we're having, that seems quite plausible, which would mean more capital to return. And I estimate, they have a $2 billion buyback happening at the moment. I think there could be another $5 billion to come over the next couple of years, which again is just very supportive for the investment case.
Oh, that's fantastic. So still very positive on that stock. It's great to hear. Look, another interesting result was Macquarie as well. A strong result there, underpinned by the commodities and infrastructure division, shall I say. Yeah. So you met with management there as well. What's the outlook at Macquarie?
I think it's one that we have owned in quite a decent way since the lows of the pandemic equity market sell-off, because it is a very good quality business. It has 4 key divisions: commodities and global markets. They do a lot of hedging, carbon trading. They're at the forefront of a lot of this new environmental trading required for carbon. The second division is a big asset management division, which incorporates a big private markets business like infrastructure and green investment. So that's about a $250 billion business. And then a third biggest is Macquarie Capital. They do a lot of principal investing also in this green energy side, but also advise on some of the world's biggest transactions. Now, that business, all areas of their business is booming at the moment. And when we look through to the second half, we see the same sorts of trends. Should see a very strong second half result. But ultimately, they are positioning themselves, when you listen to COP26, to be a vehicle for green investment, to be an advisor for green investment, and to be a co-investor for green investment over the next decade. And we think that will lead to a multi-year period of earnings outperformance against the market. So we maintain that position in Macquarie Group.
Excellent. Well, two financials you've done very well on. Well, moving along, obviously it's been a big week or so for announcements with respect to the reopening, particularly in Auckland, and also the move to the broader traffic light system. Must admit, I'm looking forward to getting a haircut. I'm not sure I'll be able to get in tomorrow, but perhaps over the weekend. We're backing a couple of reopening stocks in the funds. So I just thought I'd talk to Mark about one in particular, Sky. Obviously, they've announced that they're going to be reopening the Auckland property on December 3rd. It's a share that stock that you favour. I mean, can you tell? I think you've met with management recently as well, which love to hear what your thoughts are following that meeting, and what your outlook is for Sky.
Okay, I mean, for us, Sky remains one of the cheapest turnaround stocks, or at least reopening plays in New Zealand. I mean, many of the other reopening plays have had phenomenal runs, and I'm thinking here more specifically of Auckland Airport, even Tourism Holdings, a small internationally focused player, has had a strong rebound. Sky City has been held back in some ways because clearly we've been closed, doors have been shut. They've been losing about $1 million worth of EBITDA per day across Auckland, Queenstown, and Hamilton. But that, as you see, is about to change, and we go to the traffic light system, and clearly they're looking forward to that. Remember, of course, that Sky City, unlike Tourism Holdings, is really domestically orientated. So we don't actually need the borders to be open, and we don't need international flights. It used to be the case with VIP gaming, but by and large, as we've seen over the last couple of months, in that time where we had that brief hiatus between COVID outbreaks in New Zealand, that the gaming floor was full, that Sky City is tracking ahead of its pre-COVID levels. So it really is a domestically focused casino operator. So for us, it's that's an excellent business. What has held it back really has been, as we've said, the closures for its casinos. Also concerns about debt renegotiation and the Crown issues, which have been over the entire sector. And let's talk through those. Clearly, we're open now, which is great news, or we will be open. And then secondly, the company has come out and has renegotiated with its debt holders, and so they have the covenant restrictions raised until June next year. What does that mean? Well, it means that they'll forego, as they have done before, the first half dividend. So we won't get a dividend out of Sky, but that's clearly no surprise given they were losing $1 million worth of EBITDA a day. So was not really a secret. But what is good news is the fact that they've come to terms with their debt holders, and so that's all squared away. And then the Crown issue, well, that's by and large been settled now with Crown. I mean, it seems to have a slight spillover in the news with Star. But you can see just recently, Crown received a second bid from Blackstone, which is slightly higher than the first one. And so the sector really is in play now, as far as we can see. And if you think about it, there are only 3 listed entities in Australasia. Clearly, one is Crown, Star is the other, and then of course we've got New Zealand. And I'd say with Sky, and I'd say with respect to Sky City, they have the best casino licenses, not because they're in the best locations, but by and large they have the highest moats surrounding their businesses. And you've seen proliferations of licenses in Australia between Star's casino business in the Gold Coast and in Queensland, and you've seen additional licenses granted in Sydney, whereas neither of those will ever happen to Sky City. That's pretty much the only licenses is in Auckland, and Sky has that. There's only ever going to be one license in Hamilton. Sky has that, and its Australian businesses is only in Adelaide now, having sold Darwin. So, and there isn't going to be another license in South Australia. So really protected casino. So they're obviously in a very good position. And so I think we'll see more M&A in the sector, or at least consolidation.
Yeah, sure. And obviously, that $8.5 billion bid for Crown has implications for the sector. And I suppose, perhaps longer term, obviously they've got a monopoly position in New Zealand. Perhaps longer term online gaming. I mean, there's been talks about wanting to sort of push for regulation there. I suppose that's sort of bluer sky, is it?
Well, Sky themselves are in the online gaming space, interestingly, they spoke at their ASM, and for the first time put a figure on the total market for New Zealand online gaming, and they mentioned a number of 300 million. So it's actually a very large prize. Interestingly, there's not a lot of cost associated with it. Clearly, you've got to have the online capacity, and there are computing and software components to it. But in terms of having a specialized VIP gaming suite and fixed assets, you don't have that, obviously. But we do need regulation. We need regulation in New Zealand, and Sky's working with the regulator to try and get through that.
Excellent. Okay. Well, thanks for those comments, Emma. Well, there we go. So we've covered off the financials in Australia, and we've covered off the reopening play that is Sky City in New Zealand. I hope you found this webinar useful. Do tune in again next week. Look, if you've got any questions, you want the team to ask the team or be put to the team, do feel free to get them in. You should all actually be receiving our morning note. So I just reply to that, and we can put those questions each week. But look, Tama, thank you for your time, as well as Mark, and well done on the month that's just been and the month that we're in, and have a great day, and we'll catch you all again very soon. Bye for now.
Thank you.